Hi there, good afternoon. This is Your Stocks, a show where we answer all your stock and investment related queries. I'm Mangla Malu. With me is Ekta Batra as we speak. Not a good afternoon for the markets. The Nifty losing almost 60 points and the Nifty Bank losing 0.6%. And it's the FMCG stocks which are not doing well. HUL at the low point of the day. Asian Paints, remember, goes out of Morgan Stanley's focus list at the low point of the day as well. Hi, Ekta, good afternoon.
Hi, Manglam. It's been a quiet week as well. You know, the Nifty is just about moved around 0.12% at current reckoning on the upside. The mid-cap index is also absolutely flat on a week-to-date basis, and the Sensex as well. So not much in terms of a movement, at least on a week-to-date basis. And remember that at one point in time, we were at kissing distance from those all-time highs for the Nifty, but it seems as though that came off a little bit for the markets. But otherwise, like Mangla mentioned, that it is a bit of a sluggish session for us, particularly on Friday, with the Sensex down around 200 odd points. Let's take you through all of the top stories we're tracking this afternoon's market off the day's low, but the Sensex and the Nifty trade 0.5% lower, each dragged by IT heavyweights Infosys and TCS, and private banks like HDFC Bank and Kotak. Mid-caps fall in line.
Telecom stocks in focus yet again after sources tell CNBC-TV18 that Bharti and Vodafone Idea may file a review application for the AGR judgment today at 4 p.m. Telcos may seek review of interest and penalty payments, also a relaxation of the 3-month timeline for payment of dues.
IT stocks under pressure. Infosys is amongst the top Nifty losers after the Trump administration looks to tighten visa norms as a part of its fall agenda. U.S. Department of Homeland Security proposes to revise the definition of specialty occupation under which H-1B and L-1 visas are granted.
Zee Entertainment gains. The overhang on the stock lifts after big global investors like BlackRock, Government of Singapore, Fidelity, SBI Mutual Fund, Nippon India buy into the company.
The Reserve Bank sets up a 3-member panel to assist the DHFL administration. Rajiv Lal of IDFC First Bank, NS Kannan of ICICI Prudential and AMFI CEO NS Venkatesh are the members of the advisory panel.
All right, while we have a handful of stocks which are losing from the FMCG end of things, HUL and Asian Paints, from the mid-cap end, we're doing well for something like a Marico, which has now moved to the high point of the day. So we'll keep an eye out on all these individual stocks. But to answer all your stock queries, we have Rajat Bose as well as Shahina Mukadam joining us shortly. Let's move on to the first query that we have. Hitendra calls us from Ahmedabad. Hi, Hitendra. Good afternoon.
Good afternoon, Mangalam. My query is on DHFL. I have around 100 shares at the average price of about 358, and I've been holding it since last 2-3 years.
All right. Okay.
And yeah, so I mean, considering the current situation, I don't think I will be able to get on even at my cost price also. So I just wanted to know what level should I bite the bullet? Is this the right level, or can I expect a little bit higher from this level?
All right, we understand your question. We understand your pain as well for a person who's losing more than 90% of his capital. And you're not the only one, Hitendra. A lot of people have lost a fair amount of money in these stocks. Rajat, he's lost hope that he'll make his cost money or cost of purchase. But do you think right now is a good time to bite the bullet, or maybe wait for some more news flow that is coming by on DHFL? Technically, do you think, is there a better place where he can reduce his losses?
Well, the better place would be the 50-day moving average, which is around 29.67. And considering his buying price of 358, I don't think it makes much of a difference that way. The point is that since April, the stock, once it fell below the 50-day moving average, it never recovered above that level. The 50-day moving average always held itself above the current stock price. So that is the reason why I said that is the level to get out of. But then I would like to make a different point. The point is this: the current price of 20, maybe later it will go up, maybe later it will go down depending on the news flow. But these prices, one thing I would like to tell our investors who watch our channel, that is, these prices of 20, 22, 10, or say even penny stock prices of 4, 3, these are actually the premium that the stock market is willing to pay, considering that there is no bankruptcy. These are not the prices for the company's business. This is actually a no bankruptcy premium. So the no going concern premium. So are you willing to pay that, or you would rather take away whatever you can recover, whatever little, instead of getting it zero and sitting on your demat statement, this stock? Would you not be better off to take the money, whatever little you can get? Sometimes you will get a lottery that things recover, but mostly they don't. So my suggestion is that please do not go for no going concern premium. You get out of it.
Okay, all right. Well, we have Shaina also joining in now. Shaina, what would you recommend on DHFL? Do you think that there's any scope for recovery in the stock?
There could be a scope for recovery. One is because it's corrected a lot. Two is because there is some demand for junk bonds internationally, and I would classify DHFL as one of them. But to an extent, I would totally agree with Rajat in telling the investor that one should not be invested in such stocks. So I also have a sell recommendation. There could be a small bounce. So basically, technically, if you feel that there could be a small upside, that you can hold and get out at that point. But otherwise, there is no point in holding on for the medium to longer term.
All right, that's the view coming in on DHFL. We have another query coming in. This one is from Chandigarh. Lakshay Singla calls us. Lakshay, good afternoon. Tell us.
Hi, good afternoon. Actually, sir, I am holding 780 shares of Prakash Industries at average price of 104. So, can you please recommend me to hold or sell?
All right, Shaina, another one. Prakash Industries is the stock. He's losing almost half of his capital on this one. What would you recommend he do?
I would recommend that as of now he holds, but he should really track and keep a stop loss and sell on a bounce. So basically it is a sell on bounce because there is a lot of issues with ED raising issues with the promoter on stock manipulation, etc. So I would not be invested in such a stock. Why I am saying to hold is because there is some news developments that may see a bounce in the stock. The stock has consolidated for some time. There is news that they may be allocated the Chhattisgarh coal mine. That could see a bit of a bounce. Second is actually the stock has corrected a lot on very poor numbers that they had reported, and also over the last couple of months because of the negative news. So you may get a bounce. If you get a bounce, I would say maybe 15 to 20% bounce from here. He should definitely look to get out, but please keep a stop loss of 40, very strict stop loss, because otherwise you'll just lose your whole capital.
Okay, all right. So that's on Prakash Industries. Rajat, would you have a view? Would it be a sell?
Well, I'll concur with what Saina had to say, that is, it is an exit on rallies. I mean, whatever rally you can get, you better exit and look for better opportunities elsewhere, and at least look for a good business. Even if you get less number of stocks, but buying a good business is much better rather than getting into these kind of stocks.
Okay, all right. So that's on Prakash Industries. But let's get in another query now. We have Deepak Dodia, who writes to us from Uttar Pradesh. He holds 6,500 shares of Vodafone Idea, which was bought at 16.8 rupees since the past 8 months. He's a medium-term investor, wants to know whether to hold or sell. Well, Shaina, this one actually is an interesting one because Vodafone Idea obviously has recovered significantly from, even falling below 3 rupees per share just some time ago, and that was obviously because of all of the positive news for the space. But how would you approach it from these current levels? Do you think that it could get back to even double digits?
I think it may. So if I'm an investor, I would just hold it at current levels. I don't see any point at selling it at current levels because there are a couple of positives that are coming out. One is that the government is making an effort, and we are hearing developments where they are trying to give support to the telecom sector overall. There has been some allowance given for the spectrum payment. I think there's a 2-year moratorium that's been given. So that is a positive. The balance sheet is definitely a washout. But at the same time, I think the companies have shown that they have written off whatever they should have written off in the last quarter, which we saw the dreadful type of numbers. But I think from here, there is value in the business. So I would hold it for the business. And yeah, double digits, and then probably one could look to exit.
All right. Thanks a lot for that, Shaina. You know, the stock has recovered 200% from the lows, but still down almost 75% from the highs that we saw at the start of this year. Still down 50% from the rights issue. Rajat, your no going concern premium theory, does this apply to Vodafone Idea as well?
Yeah, it does. But then the problem is that there are lots of noises as far as a Vodafone or Vodafone Idea is concerned. Of course, the other two players are also there. But I have never been able to understand this business. I mean, we are all happy enjoying free calls, all that. But then when does the shareholder make money? I mean, in an acid taste for all the positive news that is there in Vodafone, I would wait for it to clear the level of 12 where the 200-day exponential moving average is located. If the accumulation or the heavy volume-based trading that is happening, if that has any merit, then it should cross the level of 12 where the 200-day moving average is located. If that happens, then this investor should continue to hold on. Otherwise, once this rally tapers off, you are better off getting out of this counter. And one more thing, I have never found airlines and telecom making money. At least telecom in our country, when it is going to make money, do some calculations. You will find that Airtel and Vodafone would take decades to make some good money after paying off all the debts and all the difficulties in the balance sheet to be cleared off. So, sorry, I'm not betting my money on these kind of things.
Okay, all right, fair enough. Well, Shaina and Rajat, we're going to take a break now. But before we do that, here's a look at all of the top stories on Money Control